Thanks for being a client for all that period of time. And lo and behold, we no longer want your business in the capacity in which we have had your business in the past. And the reason that she was basically being sent away, I mean, this is exactly like walking in to a restaurant and being ignored by the waiter. This is exactly like walking into a store and being ignored by that you're going to kick you off of being able to work with a professional, a financial professional, and send you off to our self-directed platform, all because your assets are now below $250,000.
It just doesn't make sense. We're in an age where automation and the internet is helping to improve communication. Should carry over to the client, but sometimes it's only helping the financial institution.
It's unbelievable, and this is a common occurrence at large financial institutions where if you're not meeting a certain minimum amount, in this case it happened to be $250,000, we've certainly seen it at $500,000 as well. These types of money, which by the way, last time I checked, Rob, $250,000, $500,000, still a lot of money in my book.
Sure.
I don't know about your book, but that's a lot of money.
That's a big chunk of money that you've saved that can help generate income. That's that's a sizable investment.
And the kicker here is that, well, she was being told to go to a self-directed platform. All she really wanted to do was to be able to talk to somebody and take out her required minimum distribution. That's all. Because she had an IRA, she was 80, so she needed to take a required distribution, not a casual distribution, but a required distribution. There's just multiple issues in this story, Rob. First of all, she's 80. Go to the self-directed internet. I mean, come on. She just wants to talk to a human being. The second of which is that she was being charged 2%. Okay? And that's a pretty high fee structure.
For somebody who's just hanging on to the assets and simply making distributions that are required, not an active trader.
Correct. And to make 2% and then be told that's not enough revenue to the institution of which you are a customer of, that we're going to kick you to the curb. We're no longer going to assist you. We're not going to have, you got to call an 800 number, you got to go online, self-direct, all that kind of stuff. And here's the crazy thing, as she said, okay, yeah, my assets had fallen below 250,000 because I'm 80, because I'm a widow, because I'm using them. And at one point, as she said, well, at one point I had 500,000, but life. And that's what's supposed to happen in the financial journey, particularly after you go through the accumulation phase, then you go into the spending phase. And so when you're in the spending phase, well, then that's when you're spending the money. Toss in that maybe the investment allocation, a whole different conversation. Maybe the investment allocation wasn't exactly where it should be. A bunch of long-term bonds, things like that, a bunch of stuff that had lost money. And in a lot of ways, it frankly really wasn't her fault that she no longer met the requirements. And what shocks me of all of this is these are the same large financial institutions that advertise that, oh, we've got your interest at heart. We're acting with your first priority and all of that. How can you possibly say that? How can you possibly be a trusted advisor if the second that you don't feel like you're making enough profit off of a client that you kick them to the curb?
It just doesn't make sense. I mean, a successful relationship with your financial advisor should really include helping the money grow, and at some point having that money generate income for you, and then at some point moving that money to the next generation. And the financial advisor that's just concerned about accumulating your assets, and then once he's got all he's going to get, then he kind of shuts you down, that's not you're certainly that's not in the client's best interest.
Off you go to the internet. Don't bother to call anybody. You're off to the self-directed. Okay, it's just unbelievable. Look, our solution, and I'm not looking to try and turn this rant into a plug for Nelson Financial Planning, but here's the reality, okay, and why we've been around as long as we have, and why we continue to help as many people as we help. Well, first of all, we got live people that answer the phone.
Correct.
So that's good, right? So not an 800 number. You're not going to get it. Okay. And then our fee, particularly our maximum fee, is 1%. So that's already 50% below that 2% that was being charged. And I got to comment on that. Look, if you as a financial firm cannot figure out a way to run a profitable business, okay, and you feel like you've got to charge so much more, I guess I would raise the question of, well, if you can't run your own business profitably and help people, maybe you shouldn't be in the business of giving advice in the first place.
I certainly don't want you managing my money if you can't take care of your own.
Can't take care. I mean, if you got to charge a client so much in order to make it profitable, then maybe you need to figure out what you're doing to make sure that you can, in fact, still continue, particularly when their assets dip, because they're using them as they age. And then lastly, Robin, you're going to love this one because we talked about this one on a prior program. Guess where her cash was?
Don't tell me sweep account.
It was absolutely in a sweep account. We talked about that earlier this summer. These are the accounts where they will not put your money in a money market and actually make a little bit of interest. They will put it into an account where they're using that money and only pay you 0.1%. So just shocking, right?
It's hard to believe sometimes.
Folks, if this is happening to you, we urge you to give us a call. If you think it might happen to you because you've got, 400,000 or 500,000, but you're using your assets and it could wind up happening to you, well, you may want to avoid that spot in the future. With that, we're going to take a break. I'm going to come back down again and we will return here on Dollars and Cents with Joel Garrison and Rob Field of Nelson Financial Planning. So thanks for bearing with us on that last segment, folks. We tell that story because it really does highlight some of the craziness that is going on out there that we see on a regular basis in the office. When people come in to visit with us for the first time and we hear these stories of how effectively they are just getting kicked to the curb because they no longer have the right amount of assets for the financial servicing institution to make enough profit off of them, that they are getting kicked to the curb and sent to the online, self-directed, whatever it is. That is just a shame, isn't it, Rob?
It is a shame. It doesn't make sense. They're just not doing what's in the best interest of a client. And we've got these generations coming. This is the biggest generation that's growing right now, and this is going to be older folks who have already saved up their money who now need income. They need the best service they can get.
Well, and in this case, I mean, that's a perfect point about needing the income, because this situation involved an 80-year-old. She'd been a longtime client of this particular financial institution. At one point, as she said, well, at one point I had $500,000, but my husband died, and I'm retired, and I need to use the money. And now, okay, yeah, I don't have as much money with them as I used to. All I really want to be able to do is talk to somebody to help me get my required minimum distribution. And lo and behold, now she doesn't even get to do that.
Right, it doesn't make sense.
It really is just so shameful, and unfortunately, not the first time we've seen it.
No, we've seen that time and time and time. Half the people that come in, it's like at my previous company where I was getting advice, they're doing this to me, and they're literally just being pushed away because they're not bringing in some huge amount of assets.
Well, and I think that's a good point, is that, the financial services industry, you've been in the financial services industry for a long time. I've been in the financial services industry for a long time. And, there certainly has been a lot of changes over the years, and so those changes continue. I think this industry is always one of those industries that sort of has a lot of changes in terms of how it services its customers, and oftentimes I think that the kind of the more things change on that front, the worse they become. It's not an improvement, if you will. It's really a reduction, or in this case, it was virtually an elimination of customer service. So again, folks, if you've run into that, or you know someone that did, this person was actually brought in by their daughter, who is a client, and this had happened to their mother, and so if you've run into this, we encourage you to come on in and have a conversation with us about this, about what exactly is going on there and how you might still be able to get some level of service and not have to pay an arm and a leg and not have to talk to a computer or a 1-800 number. So anyway, welcome into the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars, including the ones that sort of get forced on you by large financial institutions. My name is Joel Karras. I'm a certified financial planner, certified financial fiduciary. Joining me on the program this week is Rob Field, one of the fellow certified financial fiduciaries at Nelson Financial Planning. Rob also happens to be a national Social Security advisor, which gets us to our topic of this particular segment. So we've certainly talked in the past about what the decisions are, or what the implications are when you decide to take Social Security early, right? So again, if you're taking Social Security early, most people, their full retirement age is 67. You're taking it early, that means you're taking it any time between sort of 62 and that 67. So what's the impact there, if you will?
So Social Security comes up with what amount you would get at full retirement age, and they base a lot of things on that. That's the point where you could continue to work, collect Social Security, and not have a reduction. You could collect Social Security as early as age 62. It's a big reduction from what you would get at 67 or full retirement age. You can also stretch it out to age 70. That's going to be a much larger number, 30% plus more than what you would get at full retirement age. But you have to always remember that when you decide to start collecting Social Security, you sort of lock in your monthly amount. Other than maybe these cost of living adjustments that we've seen, and the last 2 years have been strong, it's not going to be 6s and 8s going forward. The average over 10 years has been about 2.6. So the decision you make to start collecting Social Security, it locks in a number. And that's the number you're going to get with a very small incremental change. It's also going to affect spousal benefits and survivor benefits.
So the timing of it, I mean, basically that sets to your point, that sets your baseline. And once your baseline is set for Social Security purposes, that's it. Then there's not like you're going to get some magical increase down the road. The only increases you're then going to get are the cost of living adjustments. But again, those are based upon that particular base that you started with.
Correct. And the cost of living adjustment, it's not a bonus. It's just bringing up the amount of your Social Security to keep up with inflation. So you even though you see the number getting bigger, it's really not bonding you more. It's just keeping you, hopefully, caught up with inflation.
And some would say that the cost of living factor that they use for Social Security doesn't really reflect the cost of living that seniors experience.
Right. When you look at the consumer price index that they normally use for workers, it's kind of catching sort of the middle-aged group. The elderly group, the people that are retired, their costs for medical, housing, and transportation is much higher than the average person.
So one of the things, though, that decision to take Social Security and sort of set that base at whatever it is the implications that it has for your surviving spouse, right? So when you pass, so when you pass, what happens with the Social Security that's coming into that married couple, Rob?
All right, so you have a husband and a wife, two spouses, and they both have qualified for collecting Social Security. So they're getting their amounts, and one person might be getting a small amount, one person might be getting a large amount, but they're getting them both. And so their budget is built on that. So now if one of the spouses passed, yes, the other spouse can pick up 100% of the widower. They can get that amount, and it might be larger than what they were getting before, but they're going to drop one. So you're not going to get both of the benefits. So what happens is sometimes, if your budget is strong and then all of a sudden you drop half of the amount of income you were getting, now you've lost a spouse and you've lost up to maybe 50% of your income.
Yeah, so we'll run a couple of different scenarios just so the listening audience kind of has an appreciation of that. So let's say married couple, and each of them is collecting $2,000 a month in Social Security. They both had relatively similar earnings records, and so they're each collecting $2,000. When one of them passes, instead of that household getting 4, then it's only going to get 2.
Correct.
And so that's a pretty significant reduction in income.
Right. I mean, sometimes you'll see the example where one spouse stayed at home, very small work record. They were collecting probably 50% of what the other spouse was getting just as a normal spousal benefit. But the example you said, if you've got 2 people, they both worked very hard, so now they've got a very nice size Social Security benefit on both sides, you're going to lose one. And you're going to lose the one that might be the smallest, but if they're both very similar, you just took an instant 50% reduction. So the point you were making is that when you decide to take Social Security at age 62, way before a spouse might pass, that's going to reflect the amount of money that the spousal benefit and the survivor benefit will be. You want to take that into consideration early into your optimization and don't get caught off guard.
And that's specifically important for that again, back to that couple where it's not an equal amount coming in for Social Security. Maybe it's one of them is at 2,000, but then the other is at 1,000. So the implications there aren't quite as dramatic as when both people are sort of collecting the same amount. But there's still the potential loss of a third of your income, even though you might still be getting survivor benefits.
Right. It's a sad situation. You've lost a spouse, and now you've had a decrease in your income, and the budget's going to be hit. But you just want to be prepared for that you are going to drop one of the 2 Social Security benefits.
So no matter what, it's a 30 to 50% drop in income.
That's correct.
So here's the point of that and why it's so important to sort of understand what retirement income planning is all about. It's not enough to just talk about retirement and the plan for that, but you've got to understand the income nuances along the way and what can happen, because this one's a pretty big one that can happen, and chances are it's going to happen to you unless both you and your spouse pass away at exactly the same time. So with that, we're going to take a break and return after these messages here on Dollars and Cents with Joel Gass and Rob Field of Nelson Financial Planning. Hey, Rob, I got a question for you.
What's that?
Do you like free money?
Very, very much, yes.
I would imagine that all of our listening audience is saying, yes, I like free money. And the neat thing about this topic is that this actually comes to us courtesy of one of our longtime listeners. We want to take a moment and encourage our listening audience, hey, if there's a question that you've got about anything that we're talking about on the program, or if you've got a topic that maybe you haven't heard us talk about, chances are over the, what did we decide, 1,500 different episodes of this program, we probably talked about it at some point, but maybe you missed that episode and there's a topic that you'd like us to talk about. Don't hesitate to reach out to us on that, either through our website at nelsonfinancialplanning.com, or you can call the office, 407-629-6477. And you know what's going to happen when you call the office, Rob?
You're going to get a live person.
You're going to get a live person. It's not going to like hit 1, hit 2, hit 3, hit 8, and then don't get connected to anybody. You're actually going to get a live person. So we encourage you to do that, particularly as you listen to the program. So Rob, tell us about this free money. How do I get my hands on some free money?
All right, so it seems like it's free, but we're actually talking about something where it's unclaimed property, probably belongs to you, you just don't know it. Now, it seems free because you probably had no idea you had this particular asset. It could be an uncashed check. Somebody issued a check, you moved, and check's not cashed, they still owe the money to you. A lot of bank accounts, people changing banks here, banks there, switching credit card balances. They might have had a credit. They don't know. No one's notified them. Could be a safety deposit box. We hear about that a lot where Somebody had a safety deposit box. They passed. Nobody knew about it. And what's nice about this system is it is free to use. You just simply log in and then plug in some information. It'll then try to look around for some unclaimed property and tell you what it is, and then you have a right to it. So,
and I've certainly been on it before, helping folks sort of navigate, putting in their names. The individual that shared this story with us said that he had helped his family, friends, neighbors, all of that, sort of find some free money, and it didn't have to be a lot. It might be only $10 here, $20 there, $50 there. I mean, but at the end of the day, it's still your money. To your point, Rob, it's your money. It's not like it's free in the sense that it wasn't yours in the first place, but you just need to go out and claim it. And so the process for doing that requires you to go to a state of Florida website, right?
Correct. It's simply www.fltreasurehunt.gov.
And that's the website to go to. That's the state-sponsored website.
Right. That's the Division of Unclaimed Property for the state of Florida. And they developed this site a while back because there used to be groups that would call you and say, hey, I found some money for you, and all you have to do is give me this fee, and then I'll process it for you. And it was all a scam. It wasn't real. So this website, there is no cost. If you go on and you find something, great. If you go on, plug in a bunch of information, nothing pops up, it didn't cost you anything. So that's the free money part, is like you truly can add some extra cash that's probably yours already. They say there's about $200,000 to $300,000 worth of unclaimed property that's available on this website.
And to find out, you just go to the website. It's fltreasurehunt.gov, and what do? Put in your name and identifying credentials, that kind of thing?
Right. So you're going to go in, and then you're going to hit the search tab, and then it's going to ask you to plug in a last name, a first name, a middle initial, a city, and a zip code. And what I would tell you is plug in all kinds of examples. Like when I go on, it's I put in Robert Field Jr., Rob Field, Robert L. Field, Robert Lee Field. All those bring up different options because it depends on how the unclaimed account was registered. And then also put in different cities. Put in where you live now. Try a city you used to live in. And then if you're helping somebody, put in their name and their information, cities they used to live. We had a client that came in and her father had passed, and she happened just to go on there, and she found a couple of things that were owed to him that had not been claimed. We helped her process it, and she actually got a couple of things back.
Yeah, and in that case, is usually, you usually have to prove who you are, and
right.
and there is some paperwork. They don't just simply write you the check, and just because you say it's yours. So there's a process of where you would have to kind of prove that that's you or that you are the beneficiary in that particular situation. But certainly a very valuable resource that we would encourage folks to check out.
Right. So once you plug it in and then try all the different examples, if there's a match, it'll pop up, and then it'll tell you who it's supposed to go to, what account it is. If you recognize that, then you click the claim button. And then, like you said, you got a couple things you've got to do so that not everybody can just get lucky and then find somebody's name and plug it. You got to show what your relationship is to that account. But within 90 days, they'll settle it out and clear it, get you the free money, or at least that money that you were owed from some time in the past.
And I think the word of warning that you mentioned, Rob, is also important to emphasize again, and that is that oftentimes there are companies out there that will send out letters that say, hey, this money is out there and we'll help you get it, but we're going to charge you 30% to be able to do that. Right. And there's probably less of that happening now because the Bureau of Unclaimed Property for the state of Florida sort of set up this separate website. As is the case for many states. I think pretty much every state has this kind of a website. But if you don't realize it and you get a letter, then you may find that you pay somebody 30% of what was yours in the first place, and all they're doing is just the process that you could easily be doing by just going to the website.
Right. A lot of people don't even realize this website's available and how easy it is to use and how it doesn't cost them a thing.
So some interesting stuff in Indeed on that. So make sure you check that out. We've certainly seen where a number of folks have been able to find things that ultimately were theirs and go through the process of claiming that. So that's fltreasurehunt.gov. So good stuff there. Want to just circle back to what we talked about, mentioned a little bit earlier in terms of our newest blog post. Rob, that one sort of comes from the program that you and Christina did earlier this summer with a neat little acronym that you came up with in terms of budget. So obviously the blog post goes into a lot more detail, but if we've got a couple of minutes here at the end of the segment, just hit kind of what that acronym is for our listening audience.
Sure. Christina and I talked about retirement in general and how budget is so important to build it in. And so we came up with this acronym just to sort of help people think about the different parts of retirement and budgets that they want. So we took the word budgets and we broke it down into B for balance, where you're going to kind of balance your income versus your expenses. Talk about U for understanding what you got, D for debt, G for your goals, E for the expectations you might have with your investments or longevity. We did T as transition, kind of how to move from the work phase over to the retirement phase. And then S for solutions. Where do you go to make sure your budget is tight and has all the things you need?
Pretty neat acronym. We encourage you to check that out on our blog post at Nelson Financial Planning. That's about it for this week's show. Thank you all for listening. Any questions or comments, go to our website, Nelson Financial Planning. Reach out to us there or call the office this week at 407-629-6477. Thanks for all y'all for listening to the program. Have a great rest of the day.